The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, folks. Welcome to the Nadex Bull Bear Binary Option Hour. We got two-thirds of the party with us so far this morning. Darrell Martin and Steve Rhodes here. Our calling number, as always, is 877-927-6648. Darrell Martin, how the heck are you today?
I am doing fabulous. How are you doing today?
Excellent, excellent. As we come into the open of this hour here, folks, you've got the Dow trading up 25 points. The S&P's up 2. Composite up 5. You've got the Russell 2000 up 2 points as well. The big story of the morning is in the commodity market. You've got gold down $24, trading out at $16.11. Silver down 34 cents. That's off about a little over 1%. Trading out at $30, and a penny light sweet crude down 1 8/10% now, off $1.72 out at 95.59. Copper down just a tad here, and the DAX in Germany looks like it's trying to stay positive here in the green. It's up 8 points. The FTSE is up 20 out there. So, Darrell, what trades are you finding this morning here in this market? They have to be in the metals business.
Yeah, we're looking at some metals and even looking at some potential shorts over on the Russell and the Nasdaq.
Russell and the Nasdaq. Why don't you take people through what it is that you're looking at there? Are you looking at one of your tools?
Yeah, you know me. I'm always making new tools. But checking out some divergences.
Okay.
And let me pull up over here, make it a little bit easier to see.
While you're doing that, let's take folks through the charts. Folks, if you are listening in on the radio or your mobile device through TFNN.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this either by watching on Tiger TV from your computer. You can do it from your smartphone devices as well. Just go to the homepage of TFNN.com. Over on the right-hand side, you'll see the button with the three little smartphone-type devices. We'll stream live to you, and the archive of this show is on Channel 10. And if you haven't had a chance to, try the Nadex platform. On the homepage of TFNN.com as well, you'll see the button on the right-hand side. Click on that. You can sign up. It takes just a few moments to sign up. They'll set you up with a paper trading account. They'll go ahead and stack it with $25,000. And Darrell does a show Monday through Friday each day from 1 to 2 p.m. He's the warm-up band for the David White show, the Power Trading Hour. And
somebody's got to be,
it's a great show. He'll teach you how to trade with the Nadex platform. And if you are in the San Francisco area, I believe that you and Tom are going to be putting together a road show here in the not-too-distant future.
Yeah, here around the middle of March. We're looking at getting that thing going. Yeah, we're pretty excited.
That would be great. Had a lot of fantastic feedback from folks in Denver on the show that you guys did out there. If we do take a look at the S&P 500, it's trying to get over its most recent high. Maybe it did. That's from February 13th. That high was 1524.69. So far today, the high 1524.24. Just has a little bit of room to run, and it is the S&P 500 that has decided to take on the role of being the strength inside the marketplace. It had set up a resistance line originally formed by a bearish engulfing candle on February 4th, folks, and it engulfed the entire session of the prior day. That was February 1st. That made the high of 1514.41 a resistance area. That resistance area, or support area now, that support area was tested twice, most recently on February 11th and as well yesterday as it got down to a low of 1514.02. Continues to reject that area until that area gets broken. This chart here looks bullish and says that the S&P could want to continue its ascent higher. That would, quite frankly, take it into the level of about 1555 out there. It's at 1524 right now. If we go take a look at the Dow, because the Dow has been a laggard here lately. If we take a look at the Dow, and you can see just how much of a laggard. You go back and take a look at that same set of candles. Now, it was not a bearish engulfing candle It was dark cloud cover candle on February the 3rd. Was it the February the 4th out there? Still, that was setting up resistance at the top of February 1st, which was 14.1978. Closed above it just by a small bit on February 12th. Back below, still back below it. That area is going to be tested this morning. Right now, you're at trading at the high so far, 14,193. I suspect that the 14,019.78 might be the area where it's going to at least be tested. And that would be on the big guy. Now let's go take a look at the Russell 2000. Russell 2000 had set up a really nice butterfly, a long-term butterfly reversal. No candles had showed up. And let's go see what the exact number was. And what I'm doing, folks, I'm going from the swing point of March 27th, going from that swing point high down to the low of June the 4th out there. And the 1.6 minute expansion of that was 920.95. That's what it was tinkering with yesterday. It got up and above that level, got closed out at 923.76. By closing above it by a few points, that doesn't mean that the pattern has failed by any stretch of the imagination. But you did get a little gap up today, and it's trading off of its session highs out there. So I suspect maybe that's one of the things that Darrell is looking at when he takes a look at the Russell 2000. What kind of trades are you finding that would be available for a short on the Russell?
Need a little bit more confirmation. You always got to wait on that right setup there. I'm waiting for a close below like the 8-day moving average right now, but got the RSI divergence lining up pretty sweet. Mm-hmm. And so basically what's going on over here, and using the scanner.
And when you're doing that, Darrell, you're using the daily numbers. Is that right?
For the divergence? No, I'm intraday.
You're intraday, okay. So what time frame is it that you're taking a look at?
I use a Renko-type bar.
Okay.
So it's timeless. It's based on ticks. It's sort of like a range bar, but it only goes in one direction.
Yes.
And basically it filters out all the noise, filters out all the time.
Yep.
And so one bar may take 5 hours, one bar may take 1 second.
Right.
So it makes it really clean. As you can see, the bars are just, very smooth. But so you can see the same... Right there on this setup right here, you can see the same thing. Like if I go over and throw up a 5-minute chart on the Russell, we ought to see the same divergence. Let's see here. Yeah, we're seeing the same divergence here, right here. So you can see between there and then right here, we're seeing that same RSI divergence, even on the 5-minute bars. So by putting that together, then I hop over and go to the small caps. And I went to go short, and then I narrowed down the minimum reward at risk ratio. And I put maximum risk 100. And then from that, I go in and pick a spread to basically find the best, spread that has the least distance to break even.
Okay.
And then I find the lowest risk and the highest reward.
Yes. And that's a trade that closes at 12 p.m.
Exactly. So this trade right here would close at 12 o'clock, and gives me, so it's a good trade because, I'm not, looking to be in the market all day.
Yeah.
Now there's another one right here which I like actually a little better. Okay. This one also closes at 12, but it gives me honestly, it's only $10 risk. I only have to move, a couple points. It's right there.
Yes.
So it's a really, rather nice lineup. For the trade, I can go in and where I can sell. So, that one's a pretty good one. But the best one probably, looking at all of them on here, without going on the negative side there, is probably going to be this right here. So I'd say the 12 o'clock one, we sell that one. We're only risking $26 on the trade. And we have a $40 profit potential. So, not too bad. And I don't expect just a massive move down. So if I could go in and get 3 or 4 points out of the trade in the next couple hours, I'd be pretty happy with that.
Excellent. And so we've got the metals moving here pretty significantly. You got gold breaking through an older support level. We'll switch over to the gold contract here right now, folks. You've got gold trading off to $26 bucks. And if we switch over here, I've got the intraday time period up for gold. I've got a 30-minute chart up on the screen here. We can switch it down to a 10-minute, but you can see volume is not subsiding at all. Certainly, way down in the extreme oversold territory, but the bulls, nobody is stepping in front of this trade here, at least not yet. Let me put this down to a 10-minute chart here just so we can see the volume. Volume really just continues to pick up as gold is moving down into the first level here where gold wants to at least move to is going to be, let me pull up the chart here. Where is it? It's right in front of me. There we go. Where gold wants to pull down to is 1584. 1584, that's the .786 retracement, folks, of the move down, and it's at 1609 right now. So making its way down to 1584 should be able to do that in pretty much a heartbeat out there. Now, breaking that hammer low, that's really, really crucial. That level is going back to the January 4th area, and I suspect that what we'll see the 1584 maybe act as an area of support on gold, and maybe it just simply works off a little bit of the oversold condition to move sideways. But it looks more likely what gold wants to do, because you got volume picking up today, already 150,000 contracts now, taking out 143,000. So you got volume picking up once again in gold to the downside, and that's where you really got a divergence in the markets here, because the markets are not paying attention to what's going on inside the commodity sector out there. And
you got gold falling like crazy right now. So,
yeah.
I mean, that's just been a massive drop. And I've actually been watching that one all morning, so it's been a pretty nice trade.
And so you take a look at standard deviation. So from a standard deviation standpoint, how far has gold moved today?
We're sitting right now at 2.
At 2.
Yep,
okay.
-2 deviations.
-2. And where's the next deviation level take you to in price?
The next deviation is going to take us down, if we went 3, which is really rare, okay?
Yeah.
1593.2.
I like that. So you got 1593, and at 1584 you set up the .786 level and of the entire. And what I'm taking a look at, folks, I'm taking a look at the move off of the lows from May of 2012 all the way up to the highs that are put in October. And so I like that move. I think that's where gold is headed to, and probably going to head to get there today.
Wow. Well, that'd be a. Now here's one of the things. We got to do it during the pit hours, so close by 1:30, which is when most of the moves should happen on gold.
Yes.
So
the
we're
reason why I say that it'll probably do that today, folks, is we're going into a holiday weekend. So we're going into holiday weekend. What we've seen here over the course of the last several trading days, we've seen large moves in the currency market, and right now we're not seeing anything substantial out there. Today we're now seeing large moves inside the commodity market. We've got bonds here. Probably I'm going to pull up bonds. Haven't looked at bonds here in a bit. Bonds yesterday gave a real nice reversal signal out there. Gave us a key reversal day, bullish engulfing candle. So that gave a nice signal coming off of the bottom out here. And so I just think that today here, coming into a 3-day weekend, somebody ought to be paying attention to what's going on inside the commodity sector. And if you take a look at gold, I can't remember which tab I've got it on my charts here, so I'm not going to spend time. Maybe I'll do it during the break here. I'll look,
right.
But normally, folks, you've got gold and the S&P in some kind of harmony, but the two of them they're not at the same dance right now. 877-927-6648. Darrell Martin, Steve Rhodes. Dow is up 19. S&P's up 2. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin and Steve Rhodes. If we take a look inside the sectors inside the S&P, the only one that is red is the energy sector. That is the XLE. So let's pop in and take a look at it. Right now it's trading out at 78.68. Yesterday had some pretty strong action. You actually had a little, what I'll call a rising three. It's a continuation pattern that completed on February the 13th out there. You had some follow-through yesterday, 7.3 million shares on its way up to the $80 range. It actually got up to a high yesterday of $79.29, right at $80. Would be the completion of a 1.272 butterfly. So that may be as high as it gets out here. Now, if you take a look at the XLE, the blue line that is on the screen, that is Basil's 9-period EMA, and it has been walking the line. That's the Johnny Cash. It's been walking that line here. You get a close today below that. That would be the first time that the XLE would be below that going back to December 31st out there. You'd also have some additional bearish indications as well with that type of close today, and that would be a close below about 78.39 is what we'll call it, trading out at 78.66 in there to complete that pattern. Darrell, any other trades or anything that you're looking at? If we wanted to take a look at, I'm going to go back to gold. And what any trades that are reward risk on gold?
Right now, you're going to have a hard time on a gold trade.
Just because of the pit close, okay.
Well, not because of the pit close, because we've already fallen 2 deviations, so you've eaten up most of the spreads.
Yeah.
You know, because it's already at the floor of most of the spreads.
Got it.
Now, you could still go in and do a binary on it. So right now, you could do a 1601 if you wanted to go short and sell it for 66. So that would give you a profit potential of $66 with a risk of $33. If it goes below, if it closes below 1601 by 130, then you would actually end up making that profit on the trade.
Yeah, well, it's going to do that. It's at 1604, and volume continues to pick up to the downside out here. You know, the currency side of the market, really not a lot of movement out here. In fact, you got the euro. If we take a quick peek in on the euro out here, I should say not much of a movement. You've got the yen weakening, so you got the U.S. dollar index getting stronger. But the euro is offsetting that a bit out here. We take a look at the euro. The euro is trading inside a little consolidation range out here. So the euro might actually set up a trade if we get a reversal signal, Darrell, as it gets up into about the 133.790 type area, and it's at 133.707. It's been trading in a little bit of a sideways consolidation here ever since about 5 in the morning yesterday. Just been moving sideways. It was really working off a oversold condition, and it set up a nice little resistance area at the bottom, which is this little hammer candle that it created at 4 o'clock this morning. And that level was tested earlier. Again, this is a 30-minute chart. That was tested at about 7:30 this morning. But this is the type of stuff that you'd like to look for. And this is the intraday chart here. We'd rather be looking at this on a Monday or Tuesday as opposed to a Friday. But this could easily be setting up if it gets up to the top here, folks, if you're watching us on Tiger TV, this red area of resistance, and it gets up there and tests that again. Now we're coming in there with we're on a 30-minute chart, so you've got kind of a wide-ranging bar out here. But if we can get the euro to move up just a bit higher, and I would say a bit higher would be testing the high of the wick from 2 o'clock this morning. That would be up at 133.922, or right in that range, and then give us a reversal signal. That would set up a nice trade to head down to the bottom of the range. So maybe we can look for a trade like that, Darrell.
Yeah, I mean, basically even looking at it right now, what I'm seeing is we actually just bounced almost off the -2 and back up to the -1 deviation on the euro right now.
Okay.
So that's actually where it's hesitating. And the second it hit that 1 deviation, see how it just slowed down? So it's barely moving right now. And so looking for a drop back after it hits that point for confirmation.
Yeah, right? And it's going to, I would move down to a intraday. I'd probably move down to a 10-minute candle signal. But, it's got some pretty good resistance right at really 133.796. If it can get up there. And then the floor on this is going to be the level of about 133.188. I would think that's probably all that you would end up getting today. 877-927-6648. We've got the Dow is up 14, S&P's up 1. Darrell and I will be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your host, Darrell Martin and Steve Rhodes. And during the break, I just happened to flip open the chart on the XAU while I was surfing around in the gold area. The XAU, I've got that up on my screen here, folks, on the weekly chart here. And the XAU is taking on a serious support level. It's trading back right now into the February 5th, 2010 swing point. The low on that is 144.55. You're actually below that. Let me see. Yeah, you're below that right now because you're at 143.87. So it's trading all the way back into the 2010 area. That level was tested on the weekly chart. We're looking at a weekly chart. That area was tested May 18, 2012. And held. It got down to 140.94, but by the end of the trading session in the week, closed out at 140.76. You then had a little bullish engulfing week. It came back and tested that area again. This was the week of July 27, 2012. Got down to a low of 142.15 and closed at 151.80. This area is also in jeopardy of falling here. And if we go take a look at retracements now, we're going to go all the way back to 2009. We're going to go from the lows down here all the way up to the high that was put in. That high was made December 10th, 2010. If you get the XAU to close below 149.11, you're at I'm sorry, that was the wrong price. 44.55, 128.51 is on the horizon. How about the ES Mini? How about folks that would be interested, Darrell, in going ahead and taking a short position in the ES Mini? What trade setups would you see set up there?
All right, one thing I want to call real quick that I'm looking at is I'm checking out just a short on the Russell now. I'm starting to get confirmation.
Okay.
So I'm just going to do a quick short-term trade. It expires at noon, and I'm going in right here. Actually, this one expires at 11. But it's pretty close. So it's only a 1 point to break even. It's only a $10 risk.
Excellent, excellent. Hey, we've got Tom is back in the
Good morning,
studio
guys.
with us. How you doing, man?
I'm doing great, man. Thanks for growling and prowling out here. I like that we finally got something with the Russell, man. With Darrell, we've been waiting forever for this Russell. How about gold, right? I mean, it's just amazing, right? I mean, it's sick, but it's going, man. It's going downtown big time, yeah.
It is, and fast. And you know, we're coming into that three-day weekend here, so no one wants to hold the hot potato.
Well, you know, the bottom, I mean, gold is screaming that the dollar is going to the freaking moon. Excuse my language, but it is. I mean, it's flat out. I mean, you get multiple ABC ups in the Dow. I mean, in the dollar.
Yes.
You know, broke it again yesterday with volume on the way up. Gold's breaking down with volume on the way down. And so, hey, Darrell, talk to us about this Russell 2000, because this is the index that has just hung up there, man. It's just pretty wild how it's happened.
Darrell?
Oh, Darrell's out there basically cutting the legs off that Russell 2000. We like that.
So you know, it's just taking a look at the XAU, and that also is pushing below its below resistance area, going all the way back to 2010.
Oh, there's big trouble, man. I mean,
yes.
this is going to be a vicious. What you have, folks, this is a monster ABC down. I mean, and it's nasty, man. You know, so whatever's going on out there, the bottom line is that this is going to do some destruction, big time too.
Yeah, and I mean, you know, as you've been pointing out, you know, over the past several days, we've seen some fairly decent intraday moves inside the currency marketplace. You know, King Dollar right now is pretty much flat.
Yes.
But you know, the metals market, the commodity market, you've got light sweet crude is now down 2%. You know, copper's off just a little bit this morning. Platinum's down 2.5%. Gold's up 2 2/10%. Silver up 2%. And the rest of the market is just ignoring it.
Exactly, and that will change. Just I was listening to the show, you know, when you guys were talking, and that will change. And the complacency is absolutely amazing. There's no doubt about it, man. You know, people sitting there saying, "Hey, you know, we've gone up and we've inched up." There's no doubt each and every week. But bottom line is that we know how this works, and when the markdown is here, folks, it is vicious. So. The commodity market is screaming right now. There's no doubt about it, man. So the thing that's amazing, too, you know, folks, is that you had plenty of these gold companies come out with numbers. And, you know, we're at 1,600 gold. Gold to get out of the ground, to really get to basically in the mint, in your hands, is really costing you, like, at least, I'd say the average is about $1,150. So the closer you get to that, the more that people won't want to buy it, but that's what you want to buy. So it's going to be really wild watching this whole thing shake out. The equities themselves, of course, have just got destroyed, absolutely destroyed. So.
Now, what's going on? I don't have any of the gold equities up on my screen. How are they dealing with? They're all
ABC structures on the way down. You take a look at Rheingold. Rheingold turn around, gap down again, another $3. You know, this is a stock that was gone from 126 down to 86. If we go look at Gold Corp, GG, would you have a Gold Corp? She's taking the B point out today. She won't have the volume, but when we bring this back, I'll bring this back a year, what you're going to see is that you have high volume lows at the July and May 2012 level, and that's where we're going. Now, you break that level, and oh man, get out of the way. I mean, just... And you know what? The way gold likes to trade, bottom line is that, you know, I suspect we're going to go there first. But if we go there and we have some real juice behind this move, there's going to be big problems. Like an Eco Eagle. An Eco Eagle's at 41 bucks. Well, you know what? We have a high volume low at an Eco Eagle at 20 bucks. And she's going there, man. She's going after it. You know, 31 will be first, but bottom line, that's a big number. And it's like, okay, if we're going after those types of numbers, what is the fundamental problem? Is the fundamental problem that there is just too much expense, or is the fundamental problem that gold actually will pull back that far? You know, we'll see. But bottom line is that, just as you were saying, Steve, and Darrell talked about how gold's getting hammered. My take on this gold downdraft, you know, is that, hey, the market's going to be right behind it, you know, because just technically we know how this works. Technically, gold is screaming that the dollar is going higher. Now, what is interesting here is that oil, and this is where, you know, in the Nadex platform, folks, you want to be all over this, because oil has finally given it up. You know, This is the first day, right, that we really got real action on the way down.
And we've had that crazy, like, heavy short going on lately.
Yeah.
So.
Oh, no, big time. And
on the COT reports.
Yeah, exactly. And that leg, you know, I mean, they sold it good today. And then, you know, it was amazing that I was listening to the financial news this morning coming in, and they were talking about, you know, okay, we're at 95 bucks, okay, and it's like, okay, hey, you know, we think it's going to 100 bucks. Why? Because, you know, we're coming up to a driving season. I'm saying to myself, man, there is so much oil. We have oil everywhere, man. What they don't know, there's oil coming out of our ears, folks, okay? So the bottom line is that, you know, why is it up there? It's up there because, you know, they can keep it up there. But once that starts going down, you're going to see the amount that basically gets pushed, and pushed very quickly, because as they've been holding it up, meaning, you know, trade is holding it up, it's like once they know the game's over, then they'll just switch the side and they'll just hammer that baby all the way down. So
yeah. And, you know, on the weekly chart for gold, you know, you're back inside the September 2011. That was the swing point that made that 1535 level. The actual swing point, the most recent one, I guess you could use the week of May 18th. The top of that is 1597.50. You've already hit that. You get to 1596.70, but I suspect you'll close inside that as well. So it looks like it's going to make a run for that 1535-ish level again.
Yeah, and you know, this is what's so wild, folks, about gold. That the swing point out there is at 1523. You know, down at the low, 1523, 1526 on a continuous contract.
Yes.
And the way this is trading right now, it's like the most deviant thing it can do, folks, okay, is not only just come down there, but spike that whole area and really just freak the whole world out.
Which sets up a nice trading range.
Oh, listen, man, it sets up the buy. It absolutely sets up the buy. You know, so it's going to be interesting as to how we come down here, because thus far, we have been, let's see, we're in February. We've been going sideways for almost a year and 3 quarters right now. And, you know, bottom line, the actual equities, folks, when you look at the gold equities and the silver equities, they actually topped out approximately May of 2010. We're in February of 2013, right?
Yeah.
Yeah, so it's all about supply and demand, and right now there's no demand. And, you know, all the filings came out yesterday, and what you do have in those filings, you know, Paulson didn't sell, and he's got to be flipped right out today, because, you know, he's not only down, he's down big money, and now you're breaking, you know, breaking lows, and bottom line is that, you know, we had just built cars, folks, for almost 2.5 months. You build cars for 2.5 months, you blow through that area, which we did, huge problem, no doubt about it. So we got a 3-day weekend.
You see in the filings yesterday?
I'm sorry?
Anything else that you saw in the filings yesterday?
What you had was that inside the GLD, so let's go look at the GLD first. And what we have inside the GLD is this, is that, and Paulson's still the largest owner inside the GLD. If we take a look at who was biting out here, is that you had J.P. Morgan was biting. They probably one of their funds. They bought 2.6 million shares. Capstone bought 1.5. Deutsche Bank bought 1. Bank of America bought 1. On the selling side, you had Lone Pine LLC. I'm not sure who that is. They sold everything. They sold 2.5 million. Alliance sold 2.
Well, they're listeners of the show.
Yeah, that's a beautiful thing. I like that. I like that. Soros sold half his position. He sold 720,000 shares, had 600,000 left. I guess the biggest thing I've got for it inside the actual gold market was that Paulson didn't sell, and that is going to be a huge problem for him because not selling, number one, we know that it's public information that the fund is down dramatically, and you're talking about double numbers, to 25%, folks, or something. So it's big, big numbers, and that number, by the way, is last quarter. So if you look at any of his stocks, like Anglo Gold is breaking lows today, has some juice behind the move. IAG is basically on its way to $2, and this is an $8 stock right now. It was $16 3 months ago. So it's going to be, to me, it's going to be more of a squeeze, and it's going to be like, okay, how much are they going to squeeze them? Hey, how about HLF, right?
Oh man, yeah.
That's gonna be a good one, folks. Okay, you got basically the two sharks out here fighting each other. And that's no doubt going to be a good one. But I can tell you, looking at the volume between Herbalife there, this thing's not going anywhere but downtown to this $26, and you're at 42 right now. And Icon did buy 12% position. He also said that he wants to talk to the firm about doing
going private.
Going private. So hey, Darrell, let's talk about the Russell 2000. So we got a tight one here. We got you got 11 o'clock, and so what is the number we need? 924 or something?
Yeah, I mean basically anything below 924 so is what you're going to be looking at on there. So now we also had an S&P. Steve was calling about checking out an S&P, and I found actually a pretty good setup on it. Okay. You're looking at going short the S&P, and we found 1480 to 1520. Oh, I like that one. Yeah. Yeah. So it gives us a nice range down. It's a tight stop on the way up. We're able to sell it at 17.5 right now, so about 1-2 points away from break even. Okay. So not a lot of distance to overcome there, and only a $26 risk on the trade. Oh, that works. So it's a pretty sweet setup. Particularly, we're talking about. And we got to 415. Yeah, exactly, so. And coming into the weekend, folks. I get with the way that the commodity market is down. There's going to be people looking and say, okay, how much do I want to hold going over the weekend? And big funds are going to hold a lot. There's no doubt about it. One day is not going to change the world out here. But what you will have, folks, is that they'll be putting on some hedges. Depending where you're listening, folks, Darrell and I are going to be out in California March 16th. You're going to see that up on the website, on our website at TFNN this coming Monday. So Nadex is sponsoring the next workshop. It's going to be at the San Francisco Marriott in San Mateo. This is Darrell Martin, Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back. We have the Dow Industrials right now up 12. Nasdaq's up 2.5. S&Ps are up $1. Gold's down 30. Silver's off 46. Platinum is down 35. Bonds are down 13. And King Dollar, she's on the move again, baby. She's up 67 ticks at 80.60. We're going to be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments in all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner right in the top on the side. You can open that account, test drive it right now. They put $25,000 of funny money into it. And, of course, make sure you listen to Darrell each and every day at 1 p.m., 1 to 2 Eastern Time, as he's laying the Nadex platform out for the world here. So, you know, what's going to be interesting here is that the market itself, you know, we got, it's almost 11 o'clock. I suspect coming into the close, you got a little more volatility. What you did have is that it's kind of interesting because what just happened here, you see that the euro went positive, then went negative. And what that was about, so check this out. This is pretty cool. What that was about is that, okay, so you get the G7 that's meeting right now, okay? And And yesterday they came out with a statement, folks, and the statement yesterday was that, hey, listen, they're going to make sure that they're going to not do a competitive devaluation on the way down. So that's, you know, basically a price war. Well, bottom line, folks, we have a price war going on, period. Well, they just came out and they said, well, listen, we are going to come out with a statement tomorrow. And now inside that statement, here, let me read it to you. The group of 20 finance chiefs are planning to disavow competitive devaluations in a statement to be released after talks end in Moscow tomorrow, according to the official from the G20 nation. The latest draft of the group's communique doesn't repeat this week's pledge by the group of 7 to avoid using exchange rates as a goal for policy. So they just changed what they said yesterday, folks, and that's why you just saw the euro. And not that it was a big move, but it's enough. You know, because the bottom line is that they are going to use, they have to use it. I mean, the bottom line is that, you know, Japan's taking a lead here, man. Japan's saying, see you later, man. You know, and I think for years no one was ever worrying about Japan. Do you know what I'm saying?
Yes, yes.
Oh, yeah, they were like just a dead currency, I mean, in a lot of people's eyes.
Exactly, no doubt, man. No doubt, you know. And now it's going to be the currency to trade for the next 10 years, you know.
Sweet, man. Bring it on.
I know. Well, you know, it's amazing, folks, and this is where you got to jump on these things, because what you have is that, you know, between the yen is going weaker and then the Nikkei wants to go higher. And, you know, I think that's the end of a 23-year bear market, you know. And that totally makes sense. You know, you only go up for so long, you only get down for so long. The Nikkei was in a 23-year bear market.
And you can trade both.
You can, which is so cool. I know. And it's just waiting for that.
Nikkei is built for nighttime traders.
Yeah, it is.
You know, I mean, really, so that's perfect for, because I know we have a lot of part-time traders out there.
Right.
You know, and they're always looking for, like, what can I trade at night? Because you try to trade the S&P, like, in the evening Asian hours, good luck. I mean, you basically better be a scalper, because that's about the only way you're going to make money.
Yes.
And, but you can actually go in and trade an active index, you know, during your evening hours.
Right.
So it's perfect.
It's huge. No, there's no doubt about it. And now, you know, yesterday, Darrell, Steve, what I was reading. So check this out. There's this Bible in Japan that when the Nikkei, of course, was running up to 35,000, you know, they couldn't keep this book in print, right? Well, bottom line, the last 3 months, right, same thing has just happened, okay? I forgot the name of the book, but I was reading it on Bloomberg yesterday. So what has happened is that, of course, the Nikkei, folks, has gone up about 28% in 4 months. So what you have is that now, you know, bottom line is that you're going to have more folks piling in. And, you know, you can make the argument, is this another dead cat bounce? And the reason I'm speculating it's not is because of the correlation in between the yen, in between the Nikkei. And what the Nikkei had done is that it got under the lows, had lighter volume, and came off with the sign of strength. You know, so we'll really know when it backs down again. This is Steve Rhodes, Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us, folks. You stay right there. We got Basil coming up. Then we're going to get you healthy with Nico and Paige. And then, of course, Darrell Martin's going to be coming up, get you healthy in the Nadex. David, Ken Shreve, and I'll be back. Have a great one, folks. Have a safe one. Thanks, guys.